A rescue package for Puerto Rico cleared a key Senate procedural vote today. This says Puerto Rico is expected to default on a $2 billion debt payment this Friday. Natalie Cohen, Managing Director of Municipal Securities Research at Wells Fargo, joins me. Good to see you, Natalie.
Hi, thank you.
So first of all, on this bill, it now is pretty much increasingly likely that this bill will win final approval with this vote.
Yes, very much so.
So what will that mean for Puerto Rico in terms of the ability to restructure this debt? Why is it so important at this point?
Right. The importance is really less. The first point is that the bill is not going to prevent the default, just to clear the air on that. The importance of getting the bill done before Friday was really to stave off litigation, similar to what you would have in a bankruptcy where you get an automatic stay on litigation. If the bill was not in place and there's a default on Friday, which there will be, creditors would come to the courts. They probably have all of their briefs already prepared and sue for payment, because the current law in the Constitution has the general obligation paying first. There's $800 million due on Friday of general obligation debt. So the bill really staves off litigation once it's signed, of course, into law.
So tell us how much of Puerto Rico's debt, generally speaking, is in the U.S. market. Who's holding it? And why is it important to watch for those debt holders? What happens next?
Okay. Another quick myth buster is that hedge funds really only came into the Puerto Rico market when the Commonwealth was downgraded below investment grade. And that was with the March $3.5 billion offering that they did, that was done as a non-investment grade deal. So since then, obviously, trading invited in a lot more high yield investors and hedge funds, but it's not the proportions that are sometimes made out. On the island itself, locals hold Puerto Rico paper, and the estimates are somewhere around 20 to 30% of all outstanding debt is held on island, and that's by individuals, professionals that have invested in the Commonwealth. So a restructuring is also going to have an economic effect, a negative economic effect on the island. There's still a fair amount in retail hands, and mutual funds, many have sold off their holdings, and so that's diminished, and I don't have the exact percentage, but there are still a few funds that have high proportion of Puerto Rico, and they're in there fighting and negotiating as we speak.
So what happens now in terms of market reaction to that debt? It remains high yield, I would assume?
Yes, definitely. I mean, a default is a default, and that has a big D associated with it. So they're out of the CAA or CCC range. They go into D default. They did have a default already on some leaseback debt, but this is a big one.
If you hold muni bonds, say outside of Puerto Rico, but you've got a muni bond fund, do you need to worry about a broader implication with any of this restructuring that's occurring?
Only a few funds actually hold a high proportion. The funds that have sold off and that have balanced their portfolios, it will be less consequential. These funds tend to be large, and what would happen is that they have probably set aside cash knowing that this is coming up. So shouldn't be a run on those funds per se.
But it could be losses.
There could be losses, and certainly, they've already marked to market because of the rating downgrades. So yes, to your question.
Do you think it will change inflows in the muni bond market going forward for any reason at all? Will people get nervous and say, I'm not going to invest in muni bonds, I'm going to invest in a different kind of fixed income instrument now?
Right. There are a number of factors at play globally that would affect the answer to that question. Foreign investment has grown in the muni market, and that's kind of a knock-on or a second cousin to treasuries. So we've been watching the level. It's not huge, but it continues to trend line up of foreign investment, and certainly since last week's UK vote, more foreign money is perhaps destined to come into the U.S. markets all in every location. And there is a perception generally that the municipal market continues to be a safe sector after Treasuries.
Natalie Cohen with Wells Fargo. Thank you so much.
Thanks so much.
I'm Rhonda Schaffler for The Street.